Hello everyone and welcome to the Creston Reeves Academy VAT and Tax webinar. My name is Phil Reynolds. I'm a Senior Manager and Specialist in Academies and Education at Creston Reeves, and I'm joined by Colin, Laidlaw.
Hi, I'm Colin Laidlaw. I'm a VAT and Duty Director at Creston Reeves.
Me and Colin are sharing the webinar duties today, and these are the subjects we're going to be covering. So we're going to be looking at registering your Academy Trust as a charity. We're going to look at gift aid. We're going to look at corporation tax and VAT. So I'll be honest, the start of the webinar is all very positive with the first two items on the agenda, and then for some people they may see it as a bit negative when we start stepping into the tax a bit later on. So registering as a charity. So it's important to note that the Academies Act 2010 granted Academy Trust exempt charity status. So that doesn't actually mean, though, that as an Academy Trust you are a charity, because you are in fact exempt from registering with the Charity Commission. If you did register with the Charity Commission, that would make you a charity. It's purely that you are an exempt charity for tax purposes. The important thing here to note is that you will register the company, the Academy Trust, with Companies House. And at that point, that will trigger a notification with HMRC, and they will automatically assume you are a trading entity, because to them, you are now active because you have set up a company. And they will write to you and let you know what your corporation tax reference number is, and the fact that they are aware that you are now trading. It's very important to note that you shouldn't ignore HMRC correspondence. The reason for this is that because they assume you are a trading entity, they will automatically issue you with a request for a corporation tax return once you have been trading for approximately a year. That in itself can be a problem, because some people will receive those letters saying, please submit your corporation tax return for such and such accounting period, and then perhaps will place that letter to one side, or may even throw that letter in the bin. And if you don't respond to that letter and file a corporation tax return, you are likely to be receiving penalties from HMRC.
And how much would that penalty be, Phil?
So the typical penalty, Colin, was about £100, but obviously the later you are, then sometimes interest gets applied. So it's very important to be aware that you don't want to incur a £100 fine in Academy Trust. Money's tight at the moment, so anything you can do to prevent things like this happening is very important. So how can you avoid the risk of filing a corporation tax return late, and even having the burden of filing a corporation tax return? Well, the key here is to register as a charity for tax purposes. The good news is registering is free, and you should do it pretty much as soon as the Academy Trust is formed. It's very simple. It is an online form that can be completed, and details of where you can find this on the internet can be seen on the screen. I would, as I mentioned, recommend that it is completed very early during your Academy Trust life, simply so you can get the ball rolling on this and get the clock ticking. That's very important, and there'll be more on that a bit later on in this webinar. By being registered, it will, as I mentioned earlier, reduce the number of annual corporation tax return requests. So therefore it reduces the risk of fines, but also reduces the risk of incurring fees from accountancy firms in dealing with your corporation tax returns. So there is a positive to this registration. The other positive is that once you are then registered as a charity for tax purposes, you can in fact claim gift aid on donations. And that is very much a good financial boost for Academy Trusts. So if we now look at gift aid, so what is it? Well, essentially it means that you can claim 25p every time an individual donates £1 to your Academy Trust. It's very important to make a note there that it is an individual. It's not a company, because it is an individual. It has to be a tax-paying individual that makes the donation. The claims for gift aid can be made online now, so that's much easier than it was in the past when people had to fill in old paper forms. And you usually receive the payment within about 5 weeks of submission. So that's quite good. So you get into money into your Academy Trust bank account within 5 weeks of claiming. HMRC do review the submissions, so just be mindful of that. Don't try and make things up or create falsified claims. The reason why that is important is because they will basically put a black mark on your account, and the reasons why that is important will come later. Some example of gift aid declaration forms can be found at the website address on the screen. It's important to have a look at these and make a note of the details that are on these forms so that you can ensure that your declaration forms are compliant. And it's important also to note that only voluntary donations are acceptable, so that therefore you don't receive a benefit in return. So a prime example would be if you held a school play and someone paid entry to get into that as a donation, because they're receiving a benefit, i.e. seeing a school play, you couldn't make a gift aid claim on that. So it's very important to make sure that it is purely voluntary and no one's kind of encouraging that you make a donation. Another example might also be auctions. So if you was to say buy a football shirt, which would cost say £50, and you auction that off for £100, you would only be able to claim 25p per pound on the additional £50 that you received on the auction of that football shirt. So it's the over and above element that is deemed to be a donation. The one other positive is also gift aid small donation scheme, which is a really easy win for Academy Trusts. It is essentially bucket collections. So where you've seen doing your shopping of a weekend and you're out on the high street and you may see quite a well-known charity that's standing there, they're shaking a bucket at you, asking you to make a donation. You as an Academy Trust can now do that under this scheme. Again, it's the same rate applies. It's 25p for every pound donation, and that can be cash or it can be a contactless card donation up to £30. It's great as well because there's no need for a gift aid declaration form, so that reduces the paperwork. And you can claim up to £2,000 per annum. Now, that's really easy, so you can get an extra £2,000. So a prime example would be that if you received £8,000 worth of donations into your bucket in a year, you could claim an extra £2,000 on those, and therefore that would give you a total of £10,000 for the year, which is really good. But as I mentioned earlier, it's important to not make sure you don't get a black mark on your account records. So you must have 2 years worth of history. So this is at the point when you started doing gift aid claims for 2 years and you haven't incurred any penalties or made any falsified claims. You must also have made a gift aid claim in the same tax year as well. So it's really important to start that ball rolling, get that charity registration process done or backdated, and then you can start the clock ticking on being able to do these bucket collections and earning your trust some extra money. Of course, if you want some more information on this subject, feel free to contact Preston Rees or indeed look at the website from the government that you can find on the screen. So that was all the positive news. I'm now going to unfortunately move on to some of what people may see as the negative news in terms of corporation tax. Before we get started into the detail, it's very important to know what the limits are with regards to corporation tax, and these can be seen on your screen. Please note that these limits are very different for VAT purposes, which Colin will cover in a little while. And it's important also to note that these limits are for the whole trust. Therefore, these limits include all the schools in your trust. It's not per school, this is per trust. You'll note at the top of the screen there that these are the limits pre-6th of April 2019. The reason being that in the 2018 budget, some new rules came in which apply from the 6th of April 2019, and these are the new limits that you can see on your screen at the moment. The positive here is actually these new limits in terms of the maximum non-primary purpose trading value is actually, these are very similar now to VAT limits, which Colin will cover. So therefore, it's not too different as it was under the previous limits that you saw. So non-primary purpose trading, let's explore that a little bit, because it's important to be clear on what this is. The prime purpose of any non-charity trading activity should be able to raise money for the trust to spend on educational outcomes. Therefore, non-primary purpose trading is income that does not fulfil the Academy Trust's objects as stated in their Articles of Association. So what kind of examples would this be? Well, there's a few here on your screen, but essentially it's things where a service is provided as part of the lettings. Pure lettings are fine, but where you start entering into lettings that maybe are like, as you can see on screen, parties, weddings, business meetings, where you're going to provide a service, that is where it essentially becomes taxable trading. Other examples are consultancy fees, so selling on your expertise to other schools, particularly human resources or IT. Also sales of goods that are non-educational. So have a think about the kind of things there. A prime example would be commission from school photos. And sales of, again, of a service, so car parking, the gym being open to the public. Think about it logically, these are trading activities. This is what a business would do. This isn't what an academy trust or a school that's there for educational purposes would be expected to be there for. It's important to monitor all these different income stream levels across the whole of your trust, because that is the only way you're going to really be able to identify, and you may be close to triggering those limits on the previous slides.
Phil, do we have clients that find it difficult to monitor these income streams?
I think so, yes, Colin. Particularly where school or academy trusts don't have centralisation in their finance department, i.e. the finance teams are still in their own individual schools, etc. So they're getting on with the day-to-day and have got more of a handle on what income streams are coming into that school and how varying that can be. So the CFO of the trust wouldn't necessarily know what, maybe it was at risk of not knowing what's in each individual school. So that can be difficult, and therefore you may trigger the limits without realising. Therefore, sometimes it is important to have the centralisation, because that can just help. Equally, making sure you've got clear reporting on your chart of accounts on your system can also help as well, and also considering maybe having separate cost centres would help you to monitor this. There are also some considerations around corporation tax to really consider, and it's important to remember that you're there for the students and not to get caught up in any other crazy ideas or plans, as that can really detract you away from the day-to-day of education and also the potential impact on your educational results. So the moral here is not to stray away from your moral or core purpose. Also think about the positives and negatives. So what will the pupils benefit from this? A prime example would be if you was to introduce a gym into your school that the students of the trust use, but then outside of school hours, you let it out to the wider public or businesses. That would be delivering on the educational side of things, but also generating a clear business benefit to the trust. Also, think about what you're going to do with the monies that are generated from this income stream. It's important to have a clear strategy and plan, and also have maybe even a contingency plan for when it may go wrong. What is your backup? Can your staff deliver? Do you have the adequate resources is another question you should pose. Too often, some people get distracted from other areas, and then those prime responsibilities tend to suffer. What about the cost of having certain activities? If you've got lettings outside of hours, that you're looking to introduce that you haven't got previously, don't forget about things like caretaker overtime or paying out for people who have access to keys to the school to let people in. That's going to be a cost and will impact on your profit lines. Are you going to use agents as well to deliver the service? Another important thing is to make sure you've got your service agreement in place. That should help clearly define the scope and ensure that it is agreed, and that helps to avoid any disputes over the delivery of services. So I would recommend you get the paperwork in place. And again, particularly with schools and academies, as we all know, it's very important to evaluate any potential reputation or damage and public perception. A good example we always tend to use at Academies is what we refer to as the Daily Mail test, and that is, would what we're doing result in being on the front page news of the Daily Mail if it went wrong? And if it is likely to, then perhaps you need to reconsider as to whether this is the right steps to take. Well, that's corporation tax in terms of the negatives, but what about the positives? How can we sometimes maybe mitigate a tax liability? Well, one way is really to establish a trading subsidiary. And it's all about planning here. Planning is very important. It would be good if you think you're going to enter into trading activities and potentially trigger the limits to actually set up this subsidiary in advance and allow it to lie dormant until you really need it. That is much a better way of dealing with things rather than having to quickly form a trading subsidiary once the limits have already been breached. In addition, it can be quite time consuming. So taking the time to ensure you've got the bank account open, you've got the right people in place to run that side of the business, that can all take time. And rather than rushing into it and making the wrong decisions, take your time, get it set up in advance, have people lined up and a plan in place so that you can make the right decisions going forward. Another important thing would be to consider having separate directors for that trading subsidiary that are not trustees of the trust. The reason why is again, that could result in distractions being caused in regards to your primary purpose. Those same trustees are trying to deliver educational benefit, but then also trying to deliver a trading benefit. And they, dare I say it, they might get a bit too excited by the trading side and forget about the educational responsibilities they have. People need to own this subsidiary and take ownership and see it as their own project, because that will make sure that they deliver it to the best of their ability. And therefore, having some segregation will really work from a governance perspective. And of course, a risk register. Academy trusts all have to have a risk register, and it's important to make sure that is updated and you consider the risks that may result from having a trading subsidiary in place. And also, some of the limitations may actually help identify some of these risks. In terms of benefits, well, the profits of a trading subsidiary can be transferred to the trust at the year end for a tax-free distribution, and that will help you to avoid paying any corporation tax. And the current rate of corporation tax in the UK is, of course, 19%, which will reduce down to 17% in the future, providing there are no government changes. Who knows? Your trust articles of association should not restrict your separate company's activities. And it's important that you separate the trading subsidiary from the trust in terms of budget planning. It shouldn't form part of that budget that is submitted to the ESFA. It's a completely separate entity. Yes, it does need a budget because you need to plan, but it shouldn't form part of what is submitted to the ESFA on an annual basis. I'd recommend considering your working capital. Do you have enough cash in the subsidiary? So maybe consider not paying up all the profits up to the trust, because you'll need to leave some working capital in there to carry on trading and also grow the business. The profits received by the trust will be unrestricted, therefore you can utilise them as you see fit for the benefit of the trust, and that can give you greater flexibility. As I mentioned, ring-fence the risks. There'll be financial, there'll be reputational away from the trust. This is a separate entity and it should stand on its own 2 feet and have its own separate governance. In terms of the negatives of having a trading subsidiary, well, it's another company. There's going to be some potentially unnecessary admin burden there. I think there's also important to think about who is going to, what additional resource you need, and who's going to process the finances. Do you need a separate accounting system? Are you going to need letterheads for this new entity? Who's going to cover with out of hours issues? Are you going to use an agent? There's a cost to that. Are you going to employ someone? Again, you're going to have tax implications with having someone on your books as an employee. So there's lots of things to consider here. VAT is another area. Just remember, this is a completely separate entity now. It's not part of the Academy Trust. Therefore, you cannot reclaim the VAT as a Section 33 body. The only way you can reclaim VAT would be to register for VAT. But the downside of that would be that would result in increasing your prices to customers. So you may have to weigh up whether to register or not. And of course, if you don't register and you can't claim your VAT, then your profits are going to shrink by 20%. Think about how you're going to establish and set up this entity. You cannot use gag monies on non-Academy Trust activities. That is a breach of a funding agreement. So don't do that. Our recommendation would be to use unrestricted funds, but ensure these are paid back immediately to the trust once the subsidiary is self-sustainable, because it should, as I mentioned, stand on its own 2 feet. Also consider losses. If this entity is going to make some losses, how are they going to be covered? It won't have the cash to cover the losses. So what will happen there? Will the entity just be shut down and wound up? And will that result in a waste of time and effort by everyone? It should be a long-term project that people buy into and take ownership of. Again, contracts of employment are going to be important here. You may need to consider issuing new contracts of employment because they will need to be accurate, particularly if staff resource is going to be shared, because recharges are another issue as well. How are you going to make sure the right time has been recharged between the two entities to avoid arguments or disputes later on? Are you going to have timesheets? That could be another admin burden. So there's lots of things to consider. I do really stress that planning is important when it comes to the tax considerations of setting up a trading subsidiary and, of course, taking advice at the right time. I'm going to hand you over now to Colin.
Thank you, Phil. So yeah, as Phil says, my name is Colin. I'm a VAT Director at Crest & Reeves. Been working in VAT with Academies for a number of years. I thought it'd be useful to start with some basic principles of VAT and then perhaps some specifics on how those principles relate to Academies. So, starting right at the beginning, some really basic principles. As the slide says, VAT is a tax on supplies that are made in the UK by a taxable person in the course or furtherance of business. So to break that down into its component parts, obviously in the UK it's fairly straightforward. VAT is only a UK tax. Anything outside the UK generally isn't subject to UK VAT. I mean, there are some exceptions to that, but we won't bore you with the details. They don't relate to Academies. A taxable person is someone who is or is required to be registered for VAT. That means that they have taxable income in excess of £85,000. As Phil said earlier, it's very similar now to the trading income, but I'll touch on that a little bit more. Now, taxable income is not necessarily all of the income that you earn. It's only income which is subject to VAT at either 0%, 5%, or 20%. Again, we'll talk a bit more about that in a minute. And in the course or furtherance of business means that they are carrying out a business. Again, we'll discuss a bit more about that and how that works. And there are some tests that are laid down by the courts to assist someone to determine whether they are actually in business or not. But examples of activities that would not be by way of business would be, for example, selling something on eBay privately. That's not a business transaction. Or giving away items free or services free to individuals, like a lot of charities might. As I alluded to earlier, where VAT is chargeable, it is either at the 0%, 5% or 20% rates. Now there are lists of items that are subject to VAT at either 0% or 5%. There is no list of items that are subject to VAT at 20%. The default position is everything's subject to VAT at 20% unless you can prove otherwise. That is, either it's a 0%, 5%, exempt from VAT, or possibly not by way of business. And again, we'll explore that in a bit more detail. So with that in mind, just a very quick basic principles on VAT recovery. This slide demonstrates the VAT recovery position for what we might call a normal business. So if you have non-business activities, you'll see the red line goes down to the left. If you're non-business, you don't have any VAT recovery. If you're in business, you do have VAT recovery, but only to the extent that you make taxable supplies. So you see the red line in the middle. If you make exempt supplies, there's no VAT recovery. If you make taxable supplies on the left-hand side of the business box, then you can recover your VAT. If you make both taxable and exempt supplies, so you can't attribute the VAT to one or the other, then you can recover some of that VAT, but only to the extent that you make taxable supplies. And that's what we call partial exemption. So with that in mind, how does that work for an academy? So there are two questions we have to ask. Is an academy in business? And if it is it a taxable person? And therefore, does it need to think about VAT registration? I'm sure most of you already know the answer to that question. Academies are generally not in business. They provide free education, which is paid for by government grant. So that's not really a business activity for VAT purpose. And so under the normal rules, you wouldn't be able to recover any VAT if you're not in business. And some of our listeners may recall, prior to 2011, this was indeed the case. An academy could not recover any VAT that it incurred in the course of its activities prior to 2011, and the VAT was generally covered by a government grant. However, the rules changed on the 1st of April 2011, and why is it that rules always change on April Fool's Day? Who knows? But there are special rules for academies now, and these are covered, as Phil referred to earlier, by Section 33B of the VAT Act. I'm not going to bore you with the details of the VAT Act, but these rules effectively put academies on the same footing as local authority schools, and they can recover the VAT they incur on their non-business activities. They're very special. Anybody else that's got non-business activities other than local authorities can't recover that VAT. So the only thing is that you can only recover VAT in respect of non-business activities. If you have any business activities, the normal rules apply, and you have to determine whether you can or can't recover that VAT. Also, unlike what you might say normal businesses, academies don't have to register for VAT in order to make their claims for VAT under the Section 33 rules. They have a choice. They can claim VAT through a VAT 126 claim form and not be registered for VAT. Alternatively, they can choose to be registered for VAT and claim it through a VAT return. There are differences between the two. A VAT 126 claim is an indefinite period. It can be 2 months, 3 months, 4 months. It's whatever period you want. It has to be at least a month, but it can be a year. A VAT return, on the other hand, is a typical quarterly VAT return, but it could be monthly instead. There's no flexibility on VAT returns. On a 126 claim, you have to provide a full list of invoices with details of the VAT that you're claiming. On a VAT return, you don't have to do that. You only have to provide the amount you're claiming. So there is a choice, and academies have that choice. Ooh. Again, with VAT registration, then you may also have the threat of HMRC coming along and visiting you and carrying out VAT inspections. I mean, obviously, through a 126 claim, they also have the ability to check and verify that information, but it's less daunting than a VAT inspection. Having said that, so we can recover our VAT in respect of non-business activities, but as Phil says, academies do have business activities. I mean, funding is limited. We need to maximise resources. So, academies carry out, activities that generate additional funds, and these mainly will be classified as business activities because of the raising of funds by charging for something. So I've given some examples on there, and we had some more examples in Phil's slides. I mean, this isn't an exhaustive list, obviously. There are many other types of supplies that academies can make. For example, one of our clients has a particularly impressive site and hires that out for a wedding venue. And to be honest, not everyone would want to do that. I mean, I wouldn't want to get married where I went to school, but, each to their own. But whatever the activity is, though, the VAT position needs to be considered. So in the examples here, shops, catering, consultancy and suppliers of staff are all likely to be subject to VAT at the standard rate of 20%. Letting of land, sports facilities is more likely to be exempt from VAT, but there are exceptions. So car parking would always be subject to VAT at 20%. If as Phil said, if you're supplying additional services such as a wedding or perhaps catering included within a venue hire, then again VAT is likely to come into it.
Would you say, Colin, that with regards to that, I think the services point is probably the key questions asked both on a tax and a VAT perspective. In that, is what we're doing here providing the service, and then to kind of step back and think, well, okay, is this VATable? Is this taxable?
Yeah, I mean, most so bare letting of land is quite straightforward. You let someone in the school hall or a classroom. Everyone kind of knows what that is, and that's exempt from VAT. If you're providing services with that, you need to question what those services are, how much value they add to the service, so to the hire, and yes, I mean whether VAT is appropriate.
Okay. Yeah.
So as I said earlier, if your value of your taxable income is in excess of £85,000, which is the current VAT registration limit, then you would be required to register for VAT. As you can see, if you look at the trading limit of the new trading limit of £80,000 versus the VAT registration for £85,000, they're still not necessarily the same, because a lot of income might be exempt from VAT and therefore not fall into the taxable income category. You could, of course, set up a trading subsidiary, again, as Phil has discussed. The VAT registration limit would apply to each entity. So you would look at the academy separately to the trading subsidiary. And you may have a situation, obviously, where both are trading below limits, obviously, in the case of the academy, and both would be less than the VAT registration threshold. Obviously, care has to be taken to make sure you're not doing that artificially, just to avoid VAT registering. But it's quite possible to do that. Alternatively, it's quite possible to have one or both register for VAT.
Yeah, it's an interesting point, Colin, actually, what you just said there. So if I had an entity, my trust, as it stood, was pretty much about to breach the limits, but that was due to, let's say, two streams of income.
Yeah.
But I then said, right, I'm going to put that stream of income into this trading sub. That's okay, but that then may be deemed that you're deliberately trying to avoid VAT.
Yes, I mean, it's common for a charity to put activity into a trading sub where it's ultra vires, so they're not allowed to do it within their charitable rules. If you're doing it just to avoid VAT registration, then it may be looked at by HMRC in a slightly different light. Okay, so with Sorry, there's not an exhaustive list of activities that an academy might have. If you have any doubt as to whether the activity is subject to VAT or not, we would suggest taking some advice, particularly if it's large. So how does that work then from a non-registered or VAT registered perspective? If you're not registered for VAT, as I said earlier, you can only recover VAT that you incur in respect of your non-business activities. So the green part of the slide on the left-hand side. Any business activities, whether they're taxable or exempt, there's no VAT recovery.
I think that's important actually, because too often I don't know if you're going to cover this, Colin, but too often I sometimes see with Academy Trust they're forgetting about this business element. So when they're making their reclaims on electricity bills, they're claiming the full VAT. But is that what you're saying? That actually they should try and restrict that?
Absolutely correct. Yes. So HMRC would expect any VAT incurred on business activities to be apportioned out and not claimed, even if it's a really small amount. As you say, the classic one is utility bills.
Yeah.
So electricity will be consumed in undertaking these activities, and HMRC do expect a restriction. So contrast that with a VAT registration. So here you can see that there's a little bit more VAT recovery. If you've got business activities, then you can recover VAT in respect of taxable activities, and the box I've called neither, but which relates to costs which are incurred in respect of both taxable and exempt activities, you can recover a proportion of that. And as I said before, that's claimed on a VAT return, not on a VAT 126 claim. But there is still exempt activities being undertaken, and so not all VAT can be recovered, subject to what we call a de minimis limit. HMRC will expect you to look at the activities and calculate how much VAT is entitled to be recovered. And this slide kind of talks to that. So you have to attribute your costs between business and non-business. And then if you have exempt activities and taxable activities, you then further have to attribute your costs to taxable and exempt, and then that pot of items that don't relate to either. And you apportion that pot under the standard method, which is a turnover-based method, so you can recover the proportion that relates to taxable income, i.e. taxable income over total income.
On that total income, if you've got something a bit unusual, so when Academy Trust, when a new school joins, they include a line that shows the value of that trust coming in as a donation, i.e. its buildings, etc. I take it you'd exclude that as a bit of an exceptional item from the, the total income.
The total income in that context doesn't mean the total income of the Academy. It would, you would ignore all your non-business income, so all the gag income, any donations and that kind of thing.
Right. Okay.
You'd only be looking there at the business income.
Okay.
There is an ability, so the standard method is a turnover-based method, and to be fair, that's the easiest one to operate. There is an ability to apply a special method. You have to seek permission from HMRC, and it has to give you a fair and reasonable result, which is different to the standard method. Most academies, if not all academies that I've worked with, do not have special methods, but there may be circumstances where a special method is required. But always seek advice in respect to special methods. It's a complicated process, and it takes a long time to agree one with HMRC. So, to summarise, points to look out for. Do you have any business activities? If you do, have you considered the VAT implications of it? Are you recovering all your VAT? Because if you've got exempt activities or you're not registered for that, you probably shouldn't. As you say, restrictions will still need to be made, either if you're not registered for VAT or if you are registered and have exempt activities. It doesn't matter how small they are, you would probably still have to make some restriction. Do you need to register for VAT if you're not already registered? The last point really, it's worth remembering that the VAT position on large-scale development projects can be complicated, with the ability to either zero rate or recover all of the VAT that's been charged. As the numbers are generally high, we would always recommend seeking advice on these. Thank you. So here's my contact details if you need to ask any questions.
Okay, thanks, Colin. So as Colin just said there, if you have any questions on the content of today's webinar, please feel free to contact one of us, and we'll be happy to help you. As I mentioned, it can be quite daunting, tax and VAT, but it's very important, although that is daunting, not just to maybe bury your head in the sand over it. It is important to maybe take due care and consideration, take advice where you feel you need it. Of course, some people may say, well, advice can be costly, but it could be even more costly if you don't get things right in the first place. So our recommendation is always to take sound advice. Thank you for listening, and take care.